Hey guys, welcome to this video. Let's run over gold together. My last post on this was fantastic. Tons of people came on. So if you want to get started with me, it's $1. Go under this video, click the link, and we'll get you set right up immediately. So let's go ahead and look at gold. What are we seeing? Well, it's quite simple, guys. I'm actually going to start a little bit abnormally here. I'm doing a stream in about half an hour, 35 minutes, 9:20 GMT. I've got my coffee. I'm in the office for the London session. On the 12-month chart, you can see, how long ago was it that we were down here? 1972, gold per ounce, you got it around 50 to $80 or so. Now, we're way higher up. And you can see we're pushing on these previous highs. And, you'll get a lot of people start to say, okay, wow, we want an all-time high. We want to break these highs and things are getting really hairy. Now, why is gold rallying? Why is it coming up? Now, if you're not aware of this, you really should be. I always say it, some guys are a bit different, but I say literally, if you don't know what's going on in the markets, you're not tracking market news, market sentiment, go on about it all the time. If you're not doing that, you're trading blind. You're out of touch. And you're not with reality. Because at the end of the day, all that's going to move, everything you can see on the right-hand side of this watch list, is market sentiment. That's all that's going to move it, okay? That's why people get fearful. That's why they get hopeful. That's why they buy. That's why they sell. That's why they hold. That's why they exit. It's all dependent on what's going on. So if you don't know what's going on, your risk is going to be out of measure and lots of things are going to change. Now, as I said, I taught a few lessons in my last gold editors pick, had like 1,000 something likes, loads of people saw it and they're still seeing it now. But let's do an update, because before I was looking at it short. Before I told everyone, okay, well, I like this short. And of course, what followed was a nice fall. Now, I did mention to everyone, you want to get long here. Okay, I said that as well. And of course, now you're rallying away. And you had people saying to me, but Will, why don't we sell it down here? Why don't we sell it at a place where people are buying it? And I said, why would you do that? Okay, you want to be trading with the money. Now, you can see the previous two times this has happened, what's gone on. If I draw a nice big eclipse symbol, it really labels the area where price has fallen twice prior, okay? So you have to ask yourself, I'm coming back to this place where people have already sold this asset heavily twice. Bear in mind, this fall was over to 1670 from 2073. This one took you all the way to 1615 from 2072. Okay, what's it going to be next time? Would you want to catch it like that? I probably would. So what I'm saying is, you're now coming up here. You don't want to hold this long. Okay, you don't want to hold it long. Yes, you might get higher. Yes, you might beat the highs. But in the long run, over your trading career, if you keep buying things for high prices, you just won't make money. Okay, so you need to exit those longs. You need to be out of them. If you took it long, get out. Okay, you've got the money. Don't be a FOMO. Don't say, oh, I think it's going to get an all-time high and it's going to be fantastic. And you sit there and you watching the numbers go up and you're, I can't close it yet. It will never end. It will keep going up and you'll say, oh, should I close it now? And you start panicking. Okay, get out and you have a long-term business. Close those trades, take your gains off the table. I'll be going over this soon again. But it's just because factually that is a high price. What you've got on the left is high price. Now, why is it a high price? It's because if you look over here, well, it's better on the monthly. It's because if I look on the monthly, how could it not be a high price? It's up where it previously fell twice before. It's almost taking over for an all-time high. It's in the word, all-time high. Okay, the three words, that means it's got to be a high price. So you want to be out. Okay, now, if you're getting short, which you absolutely should be at this point, you shouldn't be buying. It's a short. You want high prices to sell. Okay, if you're going to do that, you need to be careful. And this is why I teach people to trade. It's because if you don't have these kind of tools, doing this part is really hard. Now, you can see what's happened here. You've come just above this previous candle wick, okay? and traders have moved in and they're selling it down. It's a bit like a market maker stop. Now, you've got a fair few early support levels, which I wouldn't be surprised if you fall to first, okay? So target one is about $30 under, and that represents an early part, 20% or so or less, of this whole spectrum of a move, okay? From the previous long zone where we said 1810, I put that so many times in my updated idea. Now, the thing is, if you're going to short and you've got sentiment rallying this up, Credit Suisse, SVB, people are panicking, they want gold, okay? Some are buying crypto as well. It could keep rallying. Like I said, it could, and it could. Now, you need to be shorting it, really. Well, I would like it short. That's what I've done. I did it on various different assets when they peaked. And you can see it's a high price, and you can see what people have done before. Okay, trading is about inference, and you're looking what people did last time, and it got smoked. Okay, same thing will happen with gold eventually. It will come down. It has to. Sooner or later, it will fall. But if you're worried about it rallying, you just can't be shorting it too hard. You have to be shorting in proportion to your capital. So make sure if you are going to short sell this, you're not slamming in, you're not loading in, you're not putting your account on the line. Just take tiny positions at key resistance zones. Okay? So you can see you've already had price rejection at this point, and you've got a red candle and you've got early PA levels on the 1 hour. So you could put your time frames far higher up, and you could say, okay, well, I'm going to take a very light short up here, for example, because I'm risk averse. You just want to take tiny pieces when you get this silly rally, because if it breaks up and up and up and up, your job is to get that high price. It's to average out and get a high price as the price rises. It's not to get one price. It's not to absolutely flood in because you want one specific price point. You want tiny cuts of it, tiny chunks, and you want to spread them out. Your job as a trader is to get an average good price, okay? Because you're never going to pinpoint it. You're never going to have a pinpoint 100% accuracy hit rate constantly. It's not going to happen, okay? So just make sure you split it up, trade small, and you're looking to average that price. And again, our bias remains to the short side because we're factual traders. We know in 2020 COVID time, then you've got 2022, we know that's a peak price. And people panicked and said, wow, it's going to go up and up and up and up and up. And it did go up quite a lot. But as long as your positions are minuscule and you space them out, you're not going to have trouble. You're not going to get slammed. You're not going to get margin called unless you over leverage. That's the problem with trading. People rely on leverage and they absolutely over leverage, and it causes them to get absolutely slammed. So you just don't want that, okay? You really don't want that. Just take it easy, okay? Take it easy, small positions at price action levels or key natural market levels, places where the price clearly was previously high and you've seen it before. And as I say, I'd look for early exits. 1935 is the kind of thing I'm looking for. Sorry, 1960 area. Long term, it will fall further, but it will take a longer time, obviously, because it has to go further. A lot of the time, that will take longer time. So thanks for watching, guys. If you want to get on with me for $1, go under this video. Great stuff in there. We film a bit on the whiteboard, and there's some videos on screen. Thanks for watching, as always, guys. I start a stream in about half an hour, so I'm going to go, and I'll see you in the next one. As always, just make sure your trading is light, your trading is safe. Okay, obviously this isn't financial advice, but just make sure you're not going to over leverage in a market where the sentiment or the risk is starting to come on and people are, seeing faster, harsher moves. Thanks for watching, guys. See you in the next video.